Frank, hold it steady. I'm gonna put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Huh? Oh, yeah, sure thing. You didn't leave the keys in the spaceship, did you?
Yeah, I did. Why?
I think someone just stole it.
Oh, gosh. You know what? Whatever. That was kind of a last month thing anyways.
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
All right, everybody, welcome back to another live stream. Thank you for being here. No camera today. I am, well, this is kind of our last stream before Christmas, really. And I'm doing this one from home. So unfortunately, I don't have a webcam here. I brought all of my equipment to our studio office. And so we're just going to do faceless analysis today. Thank you for being here. We have a big one, though. Today is, of course, the core PCE figure, which will definitely have some good volatility for the markets here to kick out, or I guess to end out what has been an already interesting week. Now, I just want to warn, as I've been warning, please be aware that starting next week, you will likely get a lot less volatility in markets as things kind of dry up for the holiday season. I just want to say, first of all, happy holidays, Merry Christmas. If you celebrate it, whatever you do celebrate or don't celebrate, I hope you have some good time with family, friends, and hopefully a little bit of relaxation for those of you guys who are working and students. I hope that you get a little bit of time to just kind of reset. And if you're like me and you love trading and trading is not just work for you, maybe you'll get some time to take a look at the charts and study some stuff here before we get into the new year. I think it's a great time to do that. Anyways, again, as I mentioned, you have the core PCE figure coming out, as well as durable goods orders. Both of these figures will be important to markets. You have core PCE price index. The expectation forecast here is for 0.2%. Previously, it was 0.2%. We want to see this number come in at 0.2% or less to continue to show that disinflation trend is intact and going well. If that happens, which I think is most likely to happen, most likely we see inflation continue to cool. If that is the case, we probably see a continued downtrend on the dollar. You probably see a continuation of the indices bullishness, which, by the way, if you've been watching regularly, you know I'm out of my S&P trade. I will be watching this one for possible re-entries or opportunities to get involved again. But we have plenty to talk about here. Not the least of which is this push in gold. And I'm feeling really frustrated with gold, to be completely honest with you guys. I've been bullish on it, but just have missed move after move here. We're taking a look at the daily chart. And, you know, I wanted to ask you guys something. I need some feedback on this. I've seen some creators doing this where they do a higher time frame on the left and a lower time frame on the right. Do you guys like that idea? Like, should I do it that way, or do you like the full screen? Let me know. Drop a comment here for me if you don't mind. Let me know what you guys think. Do you guys like the idea of having a higher time frame on the left while I also do the lower time frame, or do you like the single time frame? Let me know. I'm always done single time frame because I honestly I find the full to be a little bit full screen. Okay. So, well, guys, we're making it confusing because now there's a mixed sentiment in the room. Can we do a vote? Let's do a vote really quick. I think I might be solo today. I don't know where the producers have gone today, but let me do something really quick for you guys. Hold on. I'm going to create a poll. If you guys aren't in the Telegram, help me out with this. Give me 1 second. We'll drop some links here in the chat. So Telegram link getting dropped in here right now. Okay, guys, real quick, join me in this Telegram channel. It is free to join. And let me know. I'm going to drop a poll in there now. Poll to stream poll. YouTube live stream poll. Split screen or one screen for analysis. Split screen, full screen. Okay, help me out, guys. I just dropped the poll for us. Here you go. Poll is out. If you're in the Telegram, help us out. Look at that. Julie put out a nice little picture of Frank and I. How cute, huh? Julie runs the Telegram, does a lot of the updates, and then sometimes I just come in and throw polls together. Anyways, do me a quick favor, guys. If you're in the Telegram, go ahead and just drop a vote on that. I will, for those of you, I know it doesn't, it's not the biggest deal, but I know that there's a lot of you guys who watch the show every day. I know a lot of traders now that hang out with me. And so, it does matter. If you want that full screen view, go cast your vote. Let us know. I think, I'll do what the people like, because honestly, I don't mind either way. If I had to choose, I do like my full screen approach, but don't let that influence. If you like this split screen, then vote for it. Let's see what the people say. Sorry, I've got to, okay. All right. I'll keep an eye on that vote, guys. Let me know. But anyways, we'll go to full screen for now. We'll come back. Gold popped pretty hard, guys. We had a good push to the upside here on gold. I actually don't know what caused this. Does anybody know? Retail sales. When was this push? Let's have a look. Really throughout the night, 2 a.m. onwards. Interesting. Also, guys, I'm going to check the vote standards. Let's see what people are saying. Look at this. This is just confusing. 56-44. Guys, if you haven't voted, there's only 80 votes. Go drop a vote in the Telegram. I'll drop the link one more time in case you don't have it. Go vote in our Telegram channel. Are you still playing Age of Empires 4? Heck yeah. I love Age. Okay, so let's have a look here at some stuff. So what's been going on? Look at gold here on the 1 hour. 1 hour looks real strong for gold. You've got price just finding higher lows, and I love this. I think they're, if it wasn't the Friday before the week of Christmas, I'd be a little bit more, jumping into ideas here. But from a quick 4 hour chart perspective, we were able to break this resistance, and this level has been pretty dang stubborn here recently. Here is your what was supply now turned demand zone. I'm going to go ahead and make this a current interval only chart. So check this out. So again, big breakout here. That's pretty significant considering for the last several days we've just been range bound. And to eat my own words, yesterday I pointed out I don't think this thing is going anywhere until after Christmas. And then the market said, you know what, Nick, just because you said that, here we go. No, I'm kidding. But the market did definitely have a surprising move to the upside. I will caution, if you're looking for follow through on this move, just be careful because, again, you've got Christmas right around the corner. Volatility is expected to drop off of a cliff So it's probably the case that this move will have, in my opinion, limited upside for now. Now, if you're a swing trader and you don't mind holding throughout Christmas, I'm not going to lie, I might still take this trade if it gives me a second chance entry, meaning a pullback to like 2040. I actually like this for a possible, hey, I missed the initial move, but I'll hold this through perhaps the new year and maybe even be in it on the long side. So I like this one, and we'll watch it close. I mean, gold looks actually like it's got some volatility. I want to see the EDGEFINDER. I've been working on a chart that I wanted to show you guys, and maybe this is a good example. So look at this. Okay, so behind the scenes, there's 3 of us that work on the EDGEFINDER. Frank, myself, and our developer Giles. And the 3 of us put together some data for seasonality, and I was tweaking around with it this morning and last night, and I came up with this chart, and I think that this chart may just be an improvement to our seasonality reading. I don't know. I'm not sure yet. I like both, so I've kept both. Check this out, guys. So we're going to take a quick look at seasonality, and we're going to look specifically here today at gold, because gold is top of my radar. I am very, very interested in watching gold going into the new year, and it's for one reason only. Okay, look at this. The month of January is historically, in the last 10 years, it's a good time to buy gold. Now, is that a certainty that the market will rip in January for gold? No, it's not a certainty. But nothing in trading is certainties, and probabilities can go a long way. Now, the final impact of how gold trades, this chart, be very careful, guys, by the way. We have news in like 2 minutes that could drastically change or propel gold higher. So be very careful. If news comes out and it's a little bit weak for gold, meaning probably inflation is a little bit more stubborn than we're thinking, hey, I'm going to watch gold really closely for some possible re-entries on this one. I'll be watching it, like I said, into the news, which comes out. Let me not miss it today. We're at 1 minute and 40. This is actually a big market moving event here. Potentially. We'll cover it. I'll be around with you guys. But I do want to show you this new seasonality that I've been working on really hard. Seasonality is what caught me my best trade of the year, the S&P position. So I love seasonality. In my opinion, it is my favorite thing on the entire EDGEFINDER. It gets a lot less love than a lot of, everybody loves the COT data, which I do too, don't get me wrong. But seasonality, I think, is the most slept on indicator. It's such a powerful, powerful force in markets. And it caught me, like I said, my best trade of the year with that S&P move. So I will be watching gold going into the new year. But guys, we've got 1 minute to go. Let me make sure that we are set up. So I'm going to go ahead and switch over to 2x2 here. So we've got gold. Let's do 15-minute charts. 15-minute gold bottom left. Dollar top right. Let's go. We'll keep the S&P down right. And finally, so dollar, gold, let's go Euro USD. And again, we've got about 30 seconds here. James is in the background. There's no Chandler today. Hopefully, maybe he just slept in or something, but we miss him today. We've got James on deck, though. So with that said, guys, we're coming in to the news here. We've got just about 5 or 6 seconds to go. And James is on the button today. There it goes. All right, let's see. With the core PCE number coming out, again, expecting inflation to continue cooling. The initial reaction would perhaps suggest that we got it, but let's see. Core PCE, in fact, did come out 0.1%, showing inflation still going quite well. And there goes the S&P popping. Gold coming down. Interesting stuff there. If that gold goes lower, I'm going to probably be looking at it a little closer here today. Dollar index is up. Interesting. Was it durable goods? Did durable goods come in? There it is, durable goods. That's what's pushing the dollar higher, I think. Durable goods, the surprise, big surprise. Actually, what's interesting is durable goods just came in and kind of stole the show, I would say. Core PCE, sure, 0.1 compared to 0.2. That is meaningful. But here comes durable goods. Now, if you don't know what durable goods are, let's take a look together because this is important. It's a change in the total value of new purchase orders placed with manufacturers for durable goods, excluding transportation items. So this is a measurement at the simplest understanding. This is a measurement of GDP, or not GDP, but the economy. Okay, a really strong economic number like that, especially a pretty significant outperformance, 5.4% month over month growth compared to 2.4%, which was expected. That's showing expansion in the economy. And why is that bad for stocks? Nick, markets are so frustrating and confusing. Well, if that's what you just said out loud, you know what? You're right, because it is frustrating and confusing. However, there is some logic here, right? The Fed wants to see the economy continue to cool in order to really start to cut rates. But that's not what we're seeing. We're seeing an economy that's going to stay stubborn. And I will say, you want to ask me what the bullish case for the dollar is right now? I'll show it to you. I'll show you what the bullish case could be for the dollar. It is so early on to try and say this. What could be the bullish case, and not my base case, right? My general bias here remains dollar bear into the new year. I've been on that train. I'm still on that train. Let me get out in front of this. What's the bull case though? The bull case is that the economy is too strong and that inflation ticks back higher again and finds a plateau, perhaps lower than 4%, which is what concerns were, but higher than 2%, which is what the Fed's target is. Somewhere in between. Let's say it's, we bounce around 3% and perhaps go back higher. So my point is, if you're a bull on the dollar, that economic strength, if it comes in strong, like if we get more of this sort of data, there's that possibility that the dollar starts to creep higher and break out. But I don't think that is the base case. I think inflation's coming down, as we saw it did today, right? Core inflation, or core PCE came out better than expectations. Yes, it's lower than, but the point is inflation continues to come down. That's going to be good overall for the stock market and gold, in my view. And yes, the economy's strong in the U.S. So that is a little bit of a, cold water on this gold move to the upside. Why? Think about it, guys. Strong economy is not great for gold because of one simple fact. What drives gold nuts higher? I'll tell you what it is. It is fear. That is the key word. If you want to talk fundamentals about gold, always keep in the back pocket the idea of fear in the markets. If fear is expected, then gold will likely do well. A great indicator of fear is perhaps the VIX. VIX popped. Here goes gold kind of following suit with the VIX. But gold is usually going to struggle when you see a VIX dropping dramatically. Now, what might help gold is something that I want to show you guys, and I'm watching this chart close. I'm going to keep a close eye on gold today due to the idea that I want the pullback entry if I can get it. Even though it is Friday before Christmas, I won't mind holding this thing throughout the holidays if I get the right entry. But I like this pop. This pop looks like it has room to expand further. But I want to show you guys seasonality. I put together this chart here, and I'm really excited to show this to you. Also, let me make sure that, hold on one second. Just want to make sure nobody's messaging me something critical. Nope, we're good. Okay. I wanted to show you this chart because this chart is seasonality with the 10-year average, but broken down into its week by week components. And for my friends who trade gold, can we, if you're a gold trader, let's get a gold train started. I just dropped it in the chat. You guys can probably hear my clackety keyboard at home. If you're in the gold train, drop a gold train message. If you're new here, you're probably like, what the heck does that mean? But we have a lot of gold bugs in the room. A lot of people love trading gold, investing in gold. So if you're here, let us know, drop a comment. But check this out. So the week by week breakdown here. is so fascinating to me, because look at what happens at the end and beginning of the year on the last 10 years, historically speaking, average. Isn't this fascinating? What we see here is we see that in the opening weeks of the year and at the very end of the year, historically speaking, we see a pop in gold. I find that to be really interesting. And look at how in this year, we had kind of very bearish seasonal expectations during the, what is that, like the 38th, 37th, well, the 36th through the 40th week of the year. I don't know what month that is. And like I said, I'm still working on this chart. I really need to get the month by, like, I need to get the month listed down here. We could probably go see it on the monthly seasonality chart. Yeah, September, I think, is that September and October. Anyways, my point being, there seems to be some seasonality that we're coming in that could be really positive for gold. And if you watched my videos, if you're a regular viewer, you know that I caught the S&P trade almost primarily from seasonality. Two key factors of seasonality: an election year. Ooh, we got to talk about election year and gold. This is getting good. You thought things were going to get real quiet during Christmas. It is getting quiet in terms of market volatility, but setups for New Year are no shortages anywhere. I got two things on my radar. This and the Russell are really interesting to watch. Anyways, the gold market may be moving on without me again, which will frustrate me, to be honest, but it's okay. We have to wait for the setup. We can't force anything. I'm not going to buy the breakout, right? I'm sticking to my rules. My rules would tell me I do like this setup, but I need to have a significant or reasonable pullback here before I can join this move, especially with, again, guys, around the corner is Christmas volatility going to zero. So or not volatility, but volume pretty much going to zero. So I don't want to rush into this trade, but I'll wait for the entry if I can get it. Here's the S&P 500, and S&P is up. NASDAQ is up. US 30 kind of flat. Again, gold pushing higher. Silver also kind of interesting, but noticeably not getting the same love today as gold. Very interesting to notice that. Oil also is trading higher. Here is your 4-hour chart. 4-hour chart looks pretty strong, but again, be careful. Longer term, I think that we're still in this downtrend, and the oil market has a lot to prove. You had a key OPEC nation leave the cartel, which is kind of interesting. So that kind of caused a little bit of bearishness in oil, because again, they like to regulate prices together, and if there's people leaving or groups leaving OPEC, it can really change the supply demand imbalances. So anyways, oil kind of an interesting market. I actually think that if you get a break higher, especially on today's, stronger than expected, the durable goods number, that was interesting. You get a breakout here. This is actually one I'd be interested in the new year as well. Commodities have been really pressed, and I think that there could be some room to expand higher on that. Taking a look at the dollar index still trending lower. I don't think that the trend here is in too much of a threat here after today. But if we get anything out of that, we'll definitely talk about it on stream if there's any setups on the dollar. But again, dollar really kind of overextend to the downside, but still in a pretty healthy downward trend in my personal view. So any pops could actually be setups in my view to continue the sell into the new year. But we will have to watch that one close. Again, I think that the dollar continuing lower could be real good for commodities like gold. And that's kind of my base case for the new year. I do want to keep a close eye on the Russell. The Russell is, of course, small cap stocks here in the US, and it is something that I am very, very bullish on going into the new year. If the Fed does in fact cut rates and the economy holds up, then I think Russell probably has a really good 2024. And the idea here is that, again, small cap stocks have been really put under pressure by the idea that again, interest rates being high are very costly to a very heavy financial based group of stocks. So I do think that if you get that relief in the rates, that it really should act to really strengthen the Russell. We've already seen some of that strength, but I think that there's a bit of a catch-up trade here. You compare these to the NASDAQ and the S&P. Take a look at the NASDAQ, right? NASDAQ back to the all-time highs. Meanwhile, the Russell still struggling to break out of a range here. So I think that this one has room to squeeze much higher in the new year. So I'll be watching this one very close myself for technical entries, etc. I've already sold puts on this, and that trade has gone very, very well. So we will be again watching this one close into the new year. I do want to say, if you guys are not already using the Edge Finder going into the new year, I got something cool for you. If you want access to the seasonality, the COT data, the retail sentiment, our top setups algorithm, all the scanners, if you want access to this and you haven't heard about how you can get access to it right now, if you shoot us a message, you can get 40% off. If you want access to the Edge Finder for 40% off right now, it is a one-time fee to pay to get access to our software. We don't do recurring monthly payments to our software. So if you're somebody who just wants to buy it once, get your ticket essentially, and you can use this data in your analysis every day, especially going into a new year. If you're not already using the Edge Finder, get 40% off. Shoot us a DM right here. If you message us, I have a couple people on my staff who are trained with the software. Again, we're a software company out of Atlanta, Georgia. If you want a copy of our software today for 40% off for the holiday special, shoot us a message. Let us know that you're watching the stream and that you saw the 40% off discount. That is ending today. So that's the last chance you can have for the year to get 40% off of the Edge Finder. So take advantage. If you've been sitting on the sidelines and you're like, you know what, that data looks pretty cool, I could use that in my own trading. I believe in selling something that we use ourselves, and we use this stuff every single day. So if you want a copy, shoot us a DM right now while we're live, and someone from my team will take care of you, get you set up with a copy for a really, really good discounted price. So yeah. So let's see. In terms of gold, again, into the new year, seasonality is big. I also want to take a look at smart money, see what's going on with institutional flow. So big money, still net very long gold. But remember that we talk about this section being important, but less important than the second section on this screen. Ever since we added this second section, it really shows how important it is to understand the week-to-week flow, because I want to show you a really good example. So when I say week-to-week flow, what the heck does that mean? Well, here's the idea. If you look at the US dollar, right? I've highlighted USD and I've said 4.56, or I see that the net change week to week, this is the week to week change. What you're looking at in this section is the week to week change. And we can see, sorry, my kitty cat, can you guys hear that? My cat is screaming at the door. Let me let her out. She's crying. Okay, she's left us. Could you guys hear that? She was just screaming at the door, so I had to let her out. Anyways, the US dollar, you take a look at the net change, and what we can see here is a 4.56% bearish shift, okay? But look, if you only looked at the top area, you missed the entire picture, because you would have concluded, oh, well, the dollar's super long. Well, yes, but they're shifting bearish, right? You have to understand the difference. Okay, you guys could hear that? Yeah, that was Luna. She was I've got two black kitty cats, and I don't know if I'll ever have a non-black kitty cat. They're the coolest. They just have so much personality, and they're so funny. And yeah. Anyways, I am a converted cat dad. I didn't really care too much for pets before. I feel like that's everybody. Everybody, like, you're like, oh yeah, everybody says that, until you have a dog or cat yourself, you don't understand. Then when you have it, it's like, oh, okay, that's basically my child. Anyways, look at that gold weekly chart. So this is interesting. Gold seems so ready to pop up and try this area. It is getting really, really close to this zone. Now, this is a little tricky, because if you look solely at price action, you have to ask, is this the resistance or is this the resistance? And I would say it's probably fair to say that it's kind of this whole zone. This whole zone is key. If you get price starting to break into this area and starts trading into it, it's probably a good shot it retests the all-time high. Is it going to do that during the stretch between now and New Year's? I would say very, very unlikely. Possible, Sure. Probable, not so much. So, yeah, it's a little tricky. But again, gold squeezing higher should be interesting to see if it can continue to push the limits here as we enter into the low volume phase of the year. So I did mention COT data. I want to talk a little bit about gold. Gold week over week had a little bit of a disappointing, decline in stuff, but I will say it is Friday. So if you guys are new to using COT in your analysis, let me just remind you, COT data comes out every Friday at 3:30 Eastern PM. Okay. Comes out at the end of the trading week. Basically, wherever you are, COT data essentially comes out at the end of the trading week on Fridays. Okay. Now, why does that matter? Well, the Edge Finder, what it will do at that time, at 3:30, 4 o'clock, it will start running to see if it can pull the latest data. Sometimes there's delays, sometimes it's immediate. The point, however, is overall, we get the data every Friday afternoon, and the data will automatically update for you guys to use. I use this in all my Sunday videos because I find that to be the best time to use it, right? The markets are opening back up. We now have the new COT data to consider. Again, as I mentioned, if you don't have a copy of the software, we'll drop that link one more time. If you would like a copy of the software, shoot us a DM. Let us know that you saw the holiday discount that we're doing on stream this month. Or not this month, this week. And we'll get you set up with a copy. So shoot us a DM. Again, we'll drop that link here for you in the chat. So you can send us a DM and chat with a rep to get copy. All right, guys, we're going to go to Kenzo here in just a moment. He's coming on the show. A little bit weird because I don't have my camera, but Kenzo does have his. So he'll have to be the face of the show here for a moment. But we're going to just roll a quick commercial break to thank our sponsors over at Eightcap who make this show possible. And then we'll be coming in with Kenzo to talk a little bit more with him. So coming in right after this.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 Edge Finder 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap, and if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the Edge Finder and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
All right. Hey, Kenzo, I'm sorry I don't have my camera on today. So it is, I'm working from home. So I don't have my camera at home.
Oh,
but,
okay.
Yeah. So I'm just I'm a talking avatar here. But Kenzo, how's it going? And I guess one big question for you. We're going into the Christmas season. Are you watching any charts? Are you watching any trades as we kind of wind down the year?
Yes, I was on gold, but actually the overall, I was actually looking anything that has to do with the dollar. So today, something that was interesting, it was gold. It was pushing up. I think we went out early. I did take a trade there, and it seems like it's still flying. But besides that, I think today it's only going to be the last day. Next week, it's all the holidays. I don't think the market will be moving. So maybe the other week, then it's where we're going to see the market trying to do something.
Sure. Yeah, no, I think it's definitely worth mentioning. I keep saying it because the newer traders in the room, Kenzo, that they might not have traded through a holiday season before. And I just want to warn people, don't get into a bunch of trades thinking that, it's going to keep moving because it's going to really dry up. I mean, the chart basically does not move for several days. So just a little bit of warning for people who are newer to the space. Kenzo, this gold move is the talk of the town, I think, today. It's moving higher 1%. Did you had a trade on gold, and are you looking to take any more trades on gold?
Yes, as we did speak last week, if you still remember, we asked. I'm still very bullish on gold, but since I'm already out, I think maybe my stop loss was very close. It's not really close because this is 4 hours time frame. But when I check now, I think I was supposed to maybe just trail that position. But I'm already out. It's fine because anything might change. It's Friday. Actually, we can see the market will be closing, and we're going to have higher spreads, swaps. They will be all over the place because there will be low liquidity in the market. So it's good to stay out. But what we know is I'm still bullish on gold. I still believe that we will see some serious push. But for now, I'm out. I'm out.
Sure. Yeah, and I think I've got it pulled up on my screen. Just the 1 hour chart is remarkably bullish. I mean, this is just a huge push. And it's interesting because we're seeing the inflation data come in and continue to show disinflation is happening, and it finally seems like gold is catching a little bit of a push there. However, what's interesting is that the durable goods number came out hotter than expected today. While I guess core PCE is now taking precedence over that, right? The disinflation trend continues to just be a real strong story, because if that dollar weakens, you've got it pulled up on the screen here, if that continues to weaken, it could really help out a lot of the commodities, not just gold, but also oil, silver. And you've got it drawn on your chart there. If you mind scrolling out, that zone down there, is that kind of a New Year's target for you for the dollar index?
I don't think the market will reach this on my daily time frame. Is the area that we did have as the lowest area. I don't think the market will reach this area anytime. Maybe January, maybe, unless if something happens. But I don't think, as long as we did not really reach there today, I don't think we're gonna reach that. So it means around January, maybe the market will keep selling, as we believe that the dollar is still losing some momentum. So maybe the market will find a support here, try to push back again, or maybe the market can break that. So we'll see. This is my target, and I will still be bearish until we reach that area, unless if the market decides maybe to do something.
Sure. Yeah, no, it's definitely, I think, to me, I've said it many times on the stream, but the burden right now is definitely with the bulls with the dollar index. What I mean by that is that path of least resistance is, lower for the dollar because, again, the inflation trend is trending lower. We see another major factor for fundamentalists or those aspiring to learn more about fundamentals. I mention this chart frequently. Keep your eye on yields, because yields are really driving the dollar right now. This is basically the market's expectation for what the Fed's going to do. And as this continues to trend lower, that's basically the idea that the market thinks they're going to cut sooner. And if they cut sooner, that really the edge off the dollar's bullishness. Remember, for so long, Kenzo, and for many of our audience members who have been hanging out with us, it was the opposite effect. Inflation was just so stubborn, and the dollar just kept driving higher because yields. I mean, you want to see why the dollar was so strong? Here it is on a weekly chart. Look at this. Here's the 2-year yield. That is why the dollar was so strong, right? Now you've got a change in the wind, it seems. And, if yields take out, like, for example, the March and April zone here. I mean, I think that this is, I asked you that concept with the dollar index. It's looking very similar to the dollar index. That pullback to 3.8% on the 2-year could be really interesting. And if that breaks, now you have a real, dollar bearish case. But I think that even in the meantime, there's a good chance that we go back to retest that area. And that very well is likely to happen with the way things are shaped up with, rate expectations next year. The Fed has already said they expect 3 rate cuts. The market thinks they're going to have even more than that. So it's really an interesting time. Same thing. You could also take the 10-year yield. This is higher out or longer out on the curve. But again, if you're a fundamentalist or you're trying to learn fundamentals, highly recommend you go watch some videos. I put out a couple on the government bond yields. They're very, very important stuff if you're going to be trading the DXY or denominations of it. So, yeah, I think another question for you, Kenzo, is with these yields falling, that the dollar falling, it's been a huge catalyst for the indices. I am out of my trade. I had a
100%.
Sorry, what'd you say?
No, I said 100%.
Yeah.
So yeah, or maybe to add on that, for those who don't know or not really following the yields, so the yields also, they like interest rates. So the more they expect the rates to push up, you will see you can use them as an indicator. If they are pushing up, most likely even the interest rates are pushing up. So, and if maybe it's going down, it means there is few demand. So they taking out their money, they buy other stocks like maybe Nasdaq US30. That's
Right.
why at the end of the day, you're gonna see maybe Nasdaq US30s or other ones going up, because
Right.
that money is going from the bonds to the market.
Yeah, exactly. And I think
So yeah,
that's
you can continue. You can continue.
Yeah, I was just going to say with the indices, it's very interesting as you mentioned that, a lot of money is coming out of the money markets. They're coming out of cash reserves, and people are feeling a lot more confident, especially with the Nasdaq and the S&P. I'm sorry, not the S&P, the Nasdaq and the Dow hitting their all-time highs. Do you think, Kenzo, that this is a market that you want to trade, invest, hold? I mean, what would you do with the Nasdaq and the Dow, the way they're trading right now? I've talked about it at length. The S&P trade that I was in, I'm no longer in. That trade is finished for me. However, I'm now kind of sitting on the sidelines, and I'm like, okay, next move. And I think that there may be trades for me to take throughout now and the end of the year. But I'm a little cautious. I mean, this market seems like it has made massive moves and maybe due for a bit of a pullback, but that pullback that we got a few days ago, that might have just been it for now. That there's that possibility that 1.5% down was all we had for now. But what do you think on indices? Are they overdone? Is there still opportunity? What do you think?
No, I think the overall, maybe they say the overall decision or direction, it's all bullish for now on my side. But where we are, I think we need a room for maybe a proper reversal. I think we all got happy when they say they're going to cut the rates and stuff like that. But if you check, those interest rates, they're still far. Maybe they might cut them maybe after June. So along the way, we're going to have some bad news and stuff. So, but the reversal is going to happen. And you don't really have to get stopped from these areas. But it's better to just take if maybe you get into the market, don't just fight the market, because I think where we are, I can't say we overbought. For now, I think the market is very high, but we're still going to have some serious reversals, even though we are still going to push the upside. Reversals, they're going to be there. And I don't really see a proper reversal now. And when that happens, don't get surprised, because, yeah, it will happen. Now we're just happy. Around maybe January, the market might start to sell aggressively. But at the end of the day, we might still see a continuation of a buy. But unfortunately, maybe that sell might take maybe 2 days, 3 days, or even a week. And that might scare some people. And if you don't know, that is something that can happen. And it's healthy for the market to push up, reverse, push up, and reverse. Plus, people, they're taking out their profits. If maybe we are higher like this, some people, they're going to take their profits. It's year end, or maybe it's quarterly. Some they're going to take it's yearly earnings. They're going to take their profit around Feb or January. Then we might see the market selling aggressively before we see another push. That's what I'm expecting now.
Yeah, I think it's worth mentioning. I'm kind of in the same boat. If I'm looking at the indices, I might take trades, but in terms of a longer term swing trade or hold, I'm a little bit cautious at these levels. I think you're due for a bit of a correction. But however, in the short term, there's still room, I think, to squeeze higher as people are kind of, expecting this thing like, oh, it's overbought. But at the same time, you have to think there's a lot of money coming into the system right now as people are very optimistic about where rates are going. I want to say thank you very much, Kenzo, for coming on to the show. We can let you go from here, but I just dropped your link to your channel here in the chat. If you guys are watching here with us live, make sure to go give Kenzo a subscribe on YouTube. Make sure to follow him. You can find him on his Telegram channel. He's got all the socials. So look up Extra Hot Forex here on YouTube, or just click that link that is in the chat. And Kenzo, thank you very much for coming on. I also want to say to you and your family, happy holidays. If you, whatever you celebrate, I hope you get some time away from the charts to relax a little bit, to take it easy, maybe spend some time, eat some good food, whatever you guys do. So thank you very much for coming on, and we will see you back next time.
I really appreciate that. And you too, man. Go enjoy your holidays and stuff. So yeah, we'll see you next time.
Okay, absolutely. See you, Kenzo. All right, guys, and again, I'm back to my faceless analysis. Big shout out to Kenzo and everybody who came on, the show this not just this week, but this year. We had so many people. I will say one of the things that I'm most proud of about 2023 is that on this show, we had more people from all over the world come on and contribute to what we do here than we ever have before. And that's something I think to be proud of. I think, what we do here is we bring traders together. That is the coolest thing to me that I could possibly do with my YouTube channel, is to bring on guests, to bring on people that have a lot of wisdom. Clearly, Kenzo has brought so much value to this show. So I want to make sure that when we have a guest, I always want to encourage people to go show them some support as well. They have their own YouTube channels, their own followings, etc. So yeah. So big shout out to Kenzo, and thank you to him for his analysis. Quick look at gold here again now, still printing higher. I mean, this thing does not want to quit. And this is a point where I have to sit on my hands, guys, because I'm sitting here twofold. The indices look real strong and I'm trailed out. Gold's looking real strong and I missed my entry. So, obviously, if you've been watching the show, then I had my massive winner on the S&P 500. But I've tried to stay very transparent throughout that whole process. I was early on in the trade, and then I caught the move, and that was great. But now, today, I'm feeling a little FOMO, because look at what happened. I trailed out about here, and market dropped, and now it's popped back, and now it's looking strong again. So, in hindsight, I'm feeling like, dang, should I have just re-entered my trade that soon? But the answer to me is I don't think so. And I think I have to stay disciplined enough to wait for another opportunity. Now, will there be some intraday stuff? Maybe 1 hour chart looks interesting. Maybe. I mean, it does look like we may want to go back and squeeze back up to retest this level here. This market looks really, really strong. But I'm being, I'm being pretty cautious with this, because at the end of the day, the market is looking really, really excited right now. And when the market gets really excited like this, when you're talking indices, I have to be really careful, because, again, when everybody's so euphoric, it makes me a little bit nervous. Over here, when I entered the trade, nobody was euphoric. Everybody was super pessimistic, and the bears were just dominating the Twitter feed, right? Everybody saying, this market's going back down to the lows of October 2022 and beyond. And it was like bear city. And now it's kind of bull city. And that makes me nervous, because I don't necessarily like to, chase the end of a move. So if I take a position, I'll tell you what it's going to be. It's going to be a lower time frame trade with a trailed stop or with a tight stop, etc. I still think this market can, believe it or not, I do think this thing actually can continue and perhaps even take out the highs before the new year. However, right, you have to be careful with that, because if I'm going to get into a trade, I need to be very quick, very nimble with a trade, understanding that if this level breaks here, that's probably my point to go ahead and say, you know what, actually, let me back right out of there. But we'll watch this one close. Again, I think the S&P still has room to squeeze higher, but we got to be very cautious with it. Indices still getting a very strong reading. The EdgeFinder, I will say, has absolutely been on fire with its recent setups. The top setups algorithm, if you are newer to the channel and you haven't seen this before, the EdgeFinder, what it does is it uses a combination of technicals, fundamentals, and market sentiment. All of these metrics that you see across the top of your screen, the EdgeFinder automatically pulls in the data, scores the data as bullish or bearish for an indicator for each and every asset. And then in the score column, we get a total score, and in the bias column, we get a bias. The whole point of the EdgeFinder has been to save time. I do this stuff every day for 8 years. And if you think about it, if you plan on trading for the long term, having some software to assist you and to speed up your process over many years of trading will save you tremendous amounts of time. So that's the point of the EdgeFinder. The EdgeFinder helps to confirm ideas. It helps to source data quickly, and it helps to again, keep things in check. If you don't have a copy of the EdgeFinder, like I said, click that link in the, we'll drop that link in the chat here really quick. I dropped it earlier, but if you guys would like to send us a direct message, this is the last call for the holiday sale that we're doing for 40% off. If you shoot us a DM while we are live here, someone from my team will hook you up with a copy of the EdgeFinder. Here it is. Thank you, Chandler. So we got the link there. Send us a direct message, click that link, and you can get a copy for a super discounted holiday special discount. Now, I will say, if you're somebody who's planning to take trading very seriously next year, and you've been watching and you're like, you know, I could just get it for free on the YouTube videos. We do have people who do that. And hey, you know what? I'm glad that the tool is helpful to you when you get the little glimpses on the channel and the streams and that sort of thing. But I will say, if you're serious about this stuff and you would like to get yourself a copy to be able to go through the specific data that you're interested in when you want to look at it, take advantage. Again, totally true. You can watch the channel and get snippets here and there for free, but you got to ask yourself, if you're really a serious trader and you want to get the tools, I would say just make the investment when it's super discounted like this. Get yourself the right tools for success, and again, join the many people who are using the tools to find better opportunities. It's been pretty cool to see the number of people that have gotten the software and the number of great reviews from traders that have gone on and done great things with it. S&P still pushing higher. I will be watching this thing close, but feeling a little bit frustrated, like I said, with this recent trailed out. Market's now recovering, but going to try and just stick it out, stay patient, and find the right trades. So S&P, yes, it's been a monster, but we'll wait patiently to either re-enter or not. Gold does not want to quit. Also a little frustrated with this one here today. I do want to be long on gold, but there is no entry point here for me, so I'm waiting patiently. Today, name of the game is just waiting, right? Patience is so key. And I will say it's a lot easier to be patient when you're holding on to a trade that's running hot than when you have no trades and you're like, these are trades that I would like to be in, but I cannot justify getting in them at these levels. Trader Nick and the A1 team deserve a good early break for the holidays. Thank you very much, A1 Trading, for your continuous dedication and giving us all great value. Hey, thank you very much for that positive comment. We appreciate that, guys. There are many of you who are incredibly supportive to what we do here, and we definitely appreciate that. Thanks for putting in the correct direction with this information because I was losing. Hey, you know what? If you're somebody who is struggling with your trading, highly recommend that you spend some time during this holiday season. Spend some time doing some back testing. Spend some time, obviously see your family and do that sort of stuff. But I've been saying this, and I will continue to rant about it. If you are serious about your trading and you want to be a better trader, and you have some more downtime during this time, obviously see your family, enjoy the holidays. But here's my personal recommendation: if you want to be a good trader during this holiday season, turn off the Netflix, turn off the video games, and start trading. Or not trading, but start studying. I mean, it's one of those things. If you really want to be a successful trader, it takes so much hard work. And if you're somebody who works a full-time job or you're a full-time student and you get a break here, again, you gotta look at yourself and say, do I actually want this? Okay, if you do, then back testing, studying, go through a course. There's free courses that you can find on my YouTube channel. Go through it, spend the time. I'm telling you, really important to think about. Thanks for the cool info this year. What are your thoughts on the BOJ saying that they would like to target 110 again against the dollar next year? Dean, that's really interesting. I think the yen is one of the more bearish. Well, the yen itself is one of the more bullish things that I am looking at next year. Now, when you compare that with like dollar yen, I pointed out, I think the next price action trigger would be a break through these lows. If that happens, perhaps next year, it is time to see the yen finally catch a bit of a stronger push. I mean, the yen has been so beaten up against the dollar, right? Here's the dollar against the yen. Yen has been just getting crushed by the dollar. It does seem like things are shifting a little bit with the Fed talking about rate cuts, etc. I generally like the bearish side of this chart a lot more. And we'll be looking for setups myself, actually. Love you guys. Thank you. We appreciate it. Thank you very much, Nick. Honestly, this channel has helped me a lot to understand fundamental analysis. God bless you. Thank you very much. And God bless yourself. I hope that, if my videos help traders improve, that is just awesome. You cannot imagine how cool that is to, it's kind of, you have to understand from my point of view, it's a full circle moment when people are like, hey, what you're putting out has helped me out. I'm like, you know what? That's so cool because when I started, there were people who assisted me and I learned a lot of things from other people. So it's cool to kind of give it back to the community. All right, guys, that's going to wrap up the show. Thank you very much for hanging out with me here today. We had a great show. I think we had Kenzo add some great value to what we were talking about. There's some clear setups that I'm watching. If I take any trades, last call on this, if I take any trades, you guys will see it inside of the Discord channel. If you want to join before the end of the year, shoot us a DM. Let us know you want to copy the EDGEFINDER or the Discord, and we will get you set up with that 40% off discount. That is the last chance you can get on that today. So shoot us a DM, let us know. And with that said, guys, thanks very much for tuning in to the video. Oh, sorry for streamception. Hold on. Thanks very much, guys. We'll see you back next week.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.